Hey everybody, what's going on? It's your boy the Credit Dude, founder and CEO of GodCredit.com, and welcome to my YouTube channel. My only job, is to help you navigate the world of credit with ease and simplify it so that way you can apply it in your everyday life, grasp it right away, and pretty much just become an expert in credit like I have. So I've owned GodCredit for the last 14 years. I'm excited to show you exactly how you can use your credit and use it to make money, start a business, and things like that, guys. So today, we're gonna dive into something that affects pretty much almost every consumer above the age of 18, okay? And that is the 3 most important digit number in your life, and that is your credit score, okay? So whether you're looking to buy a house, apply for a car, even lease a car, get an apartment, things like that, this credit score is pretty much gonna chase you, unfortunately, until the day you die. I mean, there's no way around it. It's one of those things that you can't really evade. And today I just wanted to help you break it down so that way you could understand it. I mean, there's a lot of information out there on YouTube and it's great. And I wanted to break it down for you so that way, like I said, you could understand it with ease and you'll be able to get a better understanding of how you can make your credit score work for you. And pretty much if your credit score is low, I'm gonna teach you I'm gonna give you the answers, okay? So that way you can get a better grade on the test, all right, guys? So I'm also gonna break down some myths that there are regarding credit scores. I'm gonna break down the 2 most common types of credit scores that are out there. So let's dive right in, guys. So I'm really excited of how this is going to impact your life and how this is gonna be able to, you could pass this information down to your kids and grandkids. And one of the things that I always preach, guys, is something called generational credit, okay? You know, there's life insurance and there's real estate that helps us build generational wealth. But honestly, imagine if every single person in our family had amazing credit from the age of 18. I mean, to be honest with you, I wouldn't even be talking to you guys if that was the case because I had to learn, and unfortunately, my parents didn't know and their parents didn't know, and unfortunately, there has to be a person in your life and your family, for that matter, that breaks that generational curse of bad credit, and you guys start to build generational credit. And it's very powerful once you really start to understand how it works, okay? So what is a credit score? I mean, guys, honestly, a credit score is just a 3-digit number. And if you didn't know this, the credit scores were designed, it's all a risk, right? It's all like a risk factor. It's to predict the likelihood of you going 90 days late or more in the next 24 months, okay? And that's why a lot of people, when they say like, oh, after 2 years, it doesn't really matter. I mean, sometimes, guys, honestly, it's true. Like a lot of lenders and a lot of mortgage companies, they really only care about the 12 to 24 months, and it's only because once you apply for something and you have things that are 2, 3, 4, 5 years old, it's not going to impact you as much. So that means that your risk score, your risk factor pretty much went down, which means your credit score is going to go up at the same time, okay? So the importance of why this credit score is important, because if you're trying to borrow money, trying to buy a house, trying to get a car, okay, they want to know, okay, if I lend this person the money, if I agree to lending them $80,000, you know, a mortgage for, you know, $400,000, like, one, I got to make sure I get my money back. What's the risk of me being able to lend this person money? Is it high? Is it low? What is it? You know what I mean? Is there circumstances that pretty much affected this person? Like, I want to know what it is, because as a bank and as a lending institution, at the end of the day, you know, they have investors, they have shareholders, they got to carry that money somehow, you know what I mean? And like I said, they just want to make sure they get their money back. All right, so credit scores range from 300 to 850, okay? And there are 2 types of credit scores out there that a lot of people talk about, and we're gonna break it down in another video. Today, I just kind of wanted to break down the importance of a good credit score, okay? So it is the FICO score and the Vantage score. We hear about it all the time, guys. People say like, oh, you know, Credit Karma shows this. When I apply for a car, it said this. When I apply for a mortgage, it said this. My app says this. Just know, guys, that there are, unfortunately, many different versions even of FICO and Vantage. I think Vantage score right now is up to 4.0, and FICO is trying to push out 10 and 10T, which, like I said, guys, we're going to break down another video. So just make sure you subscribe and hit that notification bell, so that way when I pop out these new videos, you guys are informed right away. But to kind of give you a little bit of a breakdown before I go into it further, okay, FICO score, guys, there's 2, 4, 5, 8, 9, and 10. And honestly, guys, when you go for a mortgage, they use FICO 2, 4, and 5 for a mortgage score, and there's even FICO 4 and 5 for auto scores. And then when you go for a personal loan, there's a different FICO score, a credit card, a personal loan. So there's different versions, guys. I don't want you guys to get so crazy, unfortunately, because it will drive you crazy trying to keep up with all the different types of FICO. And granted, there's not too many Vantage scores out there. But just remember, guys, that it's all a business. And Fair and Isaac Corporation, they're the ones who own and created FICO. Equifax, Experian, and TransUnion are actually the founders and owners of the Vantage score, which was founded in 2006. So there's, they got in the game. You know what I mean? They saw that there was a play for them to be able to make some money and create their own score and control that model. While as FICO scores, guys, I want to break down the components of it. There's actually 5 things that affect your FICO score, and there's 6 things that affect your Vantage score. So just for this video today, we are going to cover the FICO score. We are going to make more videos down the road as far as when it comes to the Vantage score and breaking that down, so you guys can know why on Credit Karma there's a different score and there's a different score out there. It's just because they grade the data a little bit differently. Okay, so payment history, guys, credit utilization, length of credit history, credit mix, and new credit. So I want to break each one of those down. What does it mean? How are they graded? So that way you could, once again, guys, what I want to help you is just understand how this works and why it matters. And after this video, guys, you're going to be able to understand credit, credit scores, and you're going to be able to bring it to your family, your friends, and pretty much even help them understand it a little bit better. So make sure you share this video with them too, so that way they know where you got it from, and it's not like, oh, I just read it in an article. You know what I mean? You got it from the credit dude. Okay, so let's break down the first one, guys, which is payment history. Okay, if you guys remember, I said credit scores range from what? 300 to 850. So when you take 35% of your credit score, okay, that's 192.5 points. How did I get that? So you take the 300 to 850, that's 550 points, okay? And then what you do is you subtract the 850 by 300, that's 550 points. You multiply that by 35%, and you get 192.5 points. So saying it percentages wise is great, but when you hear how many points your credit score is affected by late payments, I mean, it's almost 200 points, okay? So paying your bills on time, guys, is very important. It's crucial, and it's mandatory if you're gonna get into this credit space, okay? If you're gonna get into the credit game, you want your credit score to be high, you want bragging rights, you wanna be able to flash that American Express, and you wanna be able to get the finer things in life. Guys, it's very important for you to be able to understand that as long as you pay your bills on time, your credit score will continue to rise, but it's not the only thing that affects your credit, as we're gonna break down in this video, okay? You must put all of your accounts on auto pay. And what does that mean, guys? It's pretty much go on every account. So if you have a credit card, you have your, anything that reports to the credit bureau's eyes. Unfortunately, like your utility bill, your gas bill, that's not gonna report to your credit unless you're paying it. And there's other services out there that allow you to report your utility bills, but we're not talking about that right now, okay? Pretty much, guys, anything that reports to your credit cards, student loans, auto loans, mortgage, things like that, you wanna make sure that those accounts are on auto pay for the minimum payment. Very important, guys. If you wanna pay more down the road, or even that same day, the next day, that's fine. But do me this favor, put all of your accounts on auto pay for the minimum payment. It's gonna save you a lot of headaches. Guys, I get a lot of clients that come to me all the time that say, hey man, I got 1 late payment, 2 late payments, I forgot to put my account on auto pay. Save yourself the headache, and more importantly, save yourself the credit score drop. Because like I said, if you have a late payment, it's not gonna drop 192 points, okay, on the first one. But let's say if you have multiple credit cards, multiple late payments, guys, you're gonna be, you're gonna have a lower credit score at the end of the day. All right, so just to make sure, guys, that you cannot. I also want to break down. You cannot have a late payment on a charge-off. So we're gonna break down the different types of credit negative items down the road to another video. But once an account is charged off or it's in collections, you cannot have a late payment for that. So this is mainly late payments affect anything that's open. You have a credit card you're using every day. You have a student loan that you're paying payments on, your mortgage, your auto loan. Now, let's say you have a credit card and they close it. You still have to make on-time payments on them, because if you don't, then it'll get into charge-off status and then eventually collection status. So it's anything that's open or closed that has not been charged off. So you could still have, you know, if you have an auto loan and let's say you have mileage and you have things that you have to pay on if it was a lease, yeah, it might be closed, but you still might have to make some on-time payments in order to pay off the mileage or any excessive damage they did to that car, okay? So very, very important, guys. The next topic is credit utilization, okay? And this is 165 points. Remember, take 550 out of the credit score points, multiply that by 30%, and you get 165 points. And this pretty much affects or is affected by the balances that you have in your credit cards in relation to the credit limits that you have on those credit cards. So if you have, my dog Zoe's here, she loves being in the videos, and you'll be able to meet my dogs pretty soon. I got 3. I got Zoe, I got Louie, and I got Rosie, 3 bulldogs, all right? And they all sleep with me here. They love the office. They love it in here. All right, guys, so let's say if you have a $1,000 credit card, and that credit card is at $900 balance. That is 90% utilization. That card right there is affecting 30% of that 550, which is 165 points. So you want to make sure that across the board that you're not tapped out. But understand this, guys, even if you're making on-time payments, you're good. But if you have maxed out credit cards, your credit score can drop significantly because still it's 165 points, which is a lot. So imagine if you are late and you have maxed out credit cards. I've been there. It's going to drop your credit score a lot, guys, okay? And this is the thing that sucks, guys. Once you make an on-time payment and once you get your payment current again, you're not going to gain the points that you lost, okay? So that's why it's very important that you make sure that you're on time. Now, with your credit cards, though, the great thing is if you max it out, your credit score drops. Once you pay the card off and it reports to the credit bureaus with a zero balance, your credit score is going to go up. So that's the great thing, you know what I mean? So you do get to rebound from having maxed out credit cards. Unfortunately, with having late payments, you cannot rebound unless you hire GotCredit.com to help you out with trying to remove those late payments, all right? So one of the most important things that you could do in order to have your credit cards not maxed out and to effectively manage this is listen, you get paid X amount of dollars a month. One of the best things you could do is write down your paycheck, write down how much your mandatory bills are, what are you going to pay in your credit cards, and just make sure that you're paying it off in full every month if you can. And if you can't, I know a lot of people say 30%, 40%. Listen, at the end of the day, guys, we struggling just to make ends meet right now. 2024 is crazy. So listen, I understand you might have maxed out credit cards. It's okay. We've all had it. Just make sure you're not late, okay? And remember this, though, the more maxed out credit cards you have, the more interest you're paying. So just keep mindful of that. So what I always tell people, one of the best things you could do in order to help manage this is once you get to a certain point, right? You got to understand what your goals are. You got to understand what is the purpose of me paying on time. Number one, purpose of me paying on time is so that way my credit score never drops. What is the purpose of me having my credit utilization low? It's because your risk is lower and banks will trust you with more money. So one thing you could do, guys, if this gets out of hand where your credit utilization is a little bit high, before it gets to like 60, 70%, just get a personal loan, guys. You can go to places like Best Egg. You can go to Discover. There's a lot of places out there, SoFi, that you'll be able to get a personal loan from, or even your credit union, where as long as your credit score is good, I would say like 660 or above, and you have verified income, you can get a personal loan, wipe out all of your credit card debt. You then shift that credit card debt into installment, which now it's not in the credit score, it's not in the credit utilization category. So now your credit score is going to go up. Same debt, your payments might even be lower. But to give you an example, I just helped a client. He was looking for a $50,000 loan. He was able to get approved for a $40,000 loan. Wiped out all of his personal credit card debt. I think we saved him, I would say maybe about $1,600 a month in credit card payments. He was paying almost $2,000 a month. His new payment for his installment loan is about $400. He was able to take that $40,000 and wipe out all of his credit card debt, and now he's going to make that one payment, and he's only going to be using his business credit cards. Those business credit cards do not affect his credit utilization, so he's good to go. You know what I mean? So it's things like that. Now, your payment might not be $400. Depends on the rate, depends on your credit, depends on your terms. Okay, it might even be $800, might even be $1,000. But listen, if you get a $40,000 loan to pay off your credit cards and you're currently paying right now $2,500, and your payment's $1,000 a month, you're still winning. You have an end date of when your when your debt is gonna be paid off. And I told them, listen, make that payment to your personal loan as if you were still paying it to your credit cards, because you'll pay it off even that much faster. And we're gonna get to those videos down the road, guys. I'm telling you, I wanna help you navigate the world of credit with ease, and just so you could understand it. But I wanted to break down how each thing affects your credit first before we even get into those topics, all right, guys? My next, this is one of my favorite ones because a lot of people don't really realize how it impacts them, but it's the length of credit history or the time in file, okay? This affects 15% of your credit score, okay, which is 82.5 points. The reason why this is important, guys, is because the sooner that you start building credit, the younger you are, okay, the higher your credit score is going to be. So you have two 30-year-olds. If this 30-year-old started building the credit last year, but this 30-year-old started building the credit when they were 18, the 18-year-old is going to have a higher credit score no matter what, because their length of history and their time in file is a lot higher. Unfortunately, that's the reason why a lot of people like buying authorized user trade lines, which I don't recommend, so don't ask us. We don't sell trade lines. I'm not going to sell you an authorized user trade line, but the thing you could do is you can ask a family member to get added as an authorized user on their credit card, which is completely legal. So if you have a family member, an uncle, a grandmother, a parent, brother, sibling, things like that, you can get added to their credit card. You know them, and you'll be able to get that history from that credit card. And we're gonna make some more videos on authorized users and the importance of how you could actually manage that and how you could help your kids become 18 with an 800 credit score. It's very possible. We've seen it. We've done it. My daughter Peyton right now is 13 years old. We've added her to a couple of our credit cards, and when she's gonna be 18, she's not only gonna have great credit, but she's gonna know how to manage credit, how to build a strong credit profile, how to write checks and all that great stuff, guys, all right? So this also affects, guys, when you close an account, it does affect this category a little bit, and it also affects your utilization category a little bit as well. So let's say if you have a credit card that is a $10,000 limit, and it's like, you know, you forgot to use it, it's gonna lower your credit utilization, which could drop your credit score, but also it's gonna affect because it does affect your average age of open accounts. So this category, guys, it's pretty much your total accounts and also the average age of open accounts. So if you close that account and it's an old account, it's gonna shrink the amount of open credit you have, but also shrink your average age of open accounts, and your credit score could drop. Now, 82.5 points, still a lot of points. So you close an account, it is gonna hurt you. And that's why when you pay off an auto loan or you pay a mortgage off or a student loan, there is no way to rebound from that unless you get a new account, which then if you get a new account, it then reduces your average age of open account. So you can see, guys, how it gets a little bit crazy. And we're gonna make videos on each one of these topics, each one of these categories, so that way you can understand each category as well, a little bit more in detail, because right now I'm just kind of giving you the basics. So if you close an account, just know that your score is gonna drop. But if you get added as an authorized user to a family member's credit card, make sure that credit card is not maxed out, doesn't have any late payments, and you're good to go. And the higher the limit, the better. You can't get added as an authorized user on their auto loan or their mortgage. It could only work on credit cards, okay? Next one, guys, is credit mix or mixture of credit, which affects 10% of your credit score, which is 55 points, okay? Hopefully you guys are doing the math and totaling this up, and you guys will be able to spit out this very quickly to your friends and family, okay? So 55 points, guys. So this is a category that's very straightforward. It's very simple. It's very easy to understand. As long as you have a mortgage, an auto loan, and a credit card, you will gain all 55 points in this category. There's no other way to slice it. There's no other way to break it down. If you have a mortgage only, you'll get 1/3 of these points. If you have a credit card only, you get 1/3 of these points. If you have an auto loan and a credit card, you'll get 2/3 of these points, okay? Now, if you have all three, you're good to go. You can't get rewarded. If you have 2 mortgages, you can't get more points. If you have 3 credit cards, you're not gonna get more points. It's only when you check the box one time. Very easy to understand. And the reason why this is implemented, guys, is because it shows that you can manage different types of debt. So it does, now, just because you have an auto loan, mortgage, and a credit card, you gotta make sure you pay them on time, don't max them out, don't close them, because that's also the other categories as well, all right, guys? So that's very straightforward, mixture of credit. As long as you have a mortgage, or auto loan, and a credit card, you'll check the box on each one, okay? Unfortunately, student loans, personal loans, and other accounts don't really affect this, so it's not really gonna matter in that category, okay? Now, new credit or inquiries also affects 10% of your credit score, which is 55 points, okay? This one, I guess I get a little bit confused about because people get so crazy and they get so, they get so worked up on inquiries. Guys, inquiries only affect 10% of your score. It's not a lot, okay? Somebody, I went to the dealership and they ran my credit score dropped 100 points. It's not possible, okay? One, it's not possible because the most amount of points you lose for inquiries is 55 points. I've heard people say, you lose 2 points for inquiries, 3 points. Man, shut up. That's not the way it works, okay? You don't lose 2 points, 3 points. It's not the way it works. There's a lot of factors that go into that, and we're gonna break it down for you guys here on YouTube, okay? So you guys can understand it. But like I said, I wanted to give you guys a little bit of a crash course on inquiries, okay? And give you guys 2 things to understand when it comes to this, okay? If you apply for a mortgage or auto loan, okay, today, it is not going to affect your credit score for the first 30 days, okay? It's not going to affect your credit score for the first 30 days because technically the credit scoring algorithms, FICO, they look at it as you are rate shopping. So if you apply for an auto loan today, another one tomorrow, another one in a couple weeks, okay, that's not even going to drop your credit score right away with the FICO scores, okay? More importantly, any inquiries typically done within a 30 to 45 day period only count as one, okay? So if you go to an auto loan dealership, let's say you go to Toyota, then you go to Lexus, then you go to Nissan, Subaru, whatever the case is, and they all run your credit each day, just one time. I know a lot of the times people say, go to your credit union because they're gonna run your credit 15 times. Well, that's another video okay? We're gonna discuss that as well. But it's only gonna count as one inquiry once it actually affects your credit score, okay? And it's not gonna affect your credit score until day 31, okay? And when it does, you don't get 2 points, 3 points, all that stuff, guys. It depends on your credit profile overall, which we're gonna break down in a video explaining just inquiries, okay? But I wanted to just help you understand that auto loan inquiries and mortgage loan inquiries do not affect your credit score for the first 30 days. So there's no way your credit score can drop the next day when seeing an auto lender or a mortgage company, okay? Now it is different with credit cards. With credit cards, it does affect you right away. So if you have a credit card, let's say you apply for American Express, Chase, Discover, things like that, it does affect your credit score right away, and it does count as each individual inquiry. So just be careful with running those inquiries up, guys. If you have bad credit and you get declined, stop applying. You need credit repair, go to godcredit.com and we'll be able to help you out. But don't just keep applying if you know you're gonna get denied, all right? It looks as a high risk thing, and when you go apply for a new credit or a mortgage or auto loan and they see all these things in your credit report with no approvals, it's gonna mess you up, all right, guys? And also, I wanted to talk to you, soft inquiries, guys, are things like, let's say when you go on a website, whether it's for auto loan or personal loan, or even some people, some lenders, they want to check your credit with doing a soft inquiry. Those do not affect your credit score in any way, okay? And also, more importantly, guys, credit inquiries only remain on your credit report for 2 years, and they only affect your credit report or your credit score for the first to 12 months, okay? Even though they're on there for 2 years, it's only affected from month 1 to 12. Month 13 to 24 is on there, but it's not calculated into your credit scoring algorithm. All right, guys? And like I said, the soft inquiries, guys, those usually are done also by, let's say if you have a credit card or a loan, mortgage, they can kind of check your credit score whenever you want. It's probably sometimes when your credit score goes higher, when your credit debt goes higher and your credit score drops a little bit, some of your other credit card companies will actually even close or lower the limits on some of your credit cards because they see that you have maxed out credit cards or late payments with other lenders. And remember, it's all a risk thing, so sometimes they get a little bit scary and they get a little afraid of you being late with them or being maxed out with them. So just be careful with that. Keep that in mind. All right. So I did want to cover some myths and some misconceptions that people say. Closing old accounts will actually improve your score. It's not true, guys. If you close an old account, it actually will hurt you. So let's say if you do have to close an account, let's say if you have First, Premier, Credit One, you have those credit cards with, that are just predatory and subprime credit cards, and let's say I tell my clients get rid of those credit cards, but you might need them to build credit right away, is before you close those accounts, add another credit card, or add a personal loan or get added as an authorized user. So that way when you do close that account, you're not gonna get dinged as hard. So you gotta supplement it with something good. So that way you can pretty much not be affected so much with the closing of that account. Checking your own credit scores hurt your score. It's not true, guys. You can check your own credit as many times as you want. You can go to gotcreditmonitoring.com, check your credit report and your credit scores for $1 with all 3 bureaus, and you'll be good to go. But let's say if you are, applying for an apartment, applying for a mortgage, applying for, there are a lot of places that will do those soft inquiries that I talked about, which don't affect your credit. But checking your own credit doesn't help you. So make sure you do get credit monitoring with gotcreditmonitoring.com. It'll give you alerts, and you'll be able to check your credit score every single month. So that way you can know what's happening. You can see alerts. You can get alerted if somebody's trying to apply for credit without you knowing. And it's always just good to have credit monitoring, guys. It's $20 a month, $240 a year. You should have it. You know what I mean? You want to look at your credit report. I mean, there are websites like annualcreditreport.com. Unfortunately, though, those are static reports. You won't get updated as they get updated. So that's why credit monitoring is good to go. All right, guys. So pretty much almost done, and I wanted to explain to you guys why your credit score matters. It matters because, so think about it like this: the higher your credit score, the more money that you save in interest and things down the road. The lower your credit score, the more money you pay on things down the road. So it's kind of like I was in the Marine Corps, as you guys could see. Shout out to all the veterans out there, no matter what branch of service you served in, guys. I salute and respect you guys, ladies and men. Okay. It would behoove you, it would behoove you to be there on time. It would behoove you to make your rack, all right? So guys, it would behoove you to pretty much have a higher credit score. You could practice these principles, guys. I'm telling you, I'm gonna teach you guys how to become credit experts through my YouTube channel, and hopefully you have learned something along the way just today to pretty much put in your toolbox and apply it in your everyday life, so that way you could build generational credit. Because it ain't about us, guys. Our time's over. It's about our kids and grandkids. We got to think about them. Every single move that we make should be focused on them. Am I going to buy this $1,000 sneakers? Let me buy a $100 pair of sneakers. Let me put this $900 away somewhere else in the stock market or somewhere else, okay? Or maybe a life insurance policy. Let me invest this money for my kids, okay? So pretty much, guys, higher your credit score, lower the interest rates, okay? Mortgage rates right now, they're going down. Auto loaning rates are still going down, but it's not what it used to be, guys, okay? With the same house 3 or 4 years ago would have cost you a lot cheaper, okay? And that's why it's important for you to have good credit, because when the opportunity comes and presents itself, you'll be able to take advantage of it, all right, guys? Better insurance premiums, believe it or not, guys, if you're going even for life insurance, if you're going for auto insurance, homeowners insurance, things like that, your credit can affect your policy. So make sure that you guys have good credit for when these things, and you should have life insurance, okay? And with auto loan insurance and homeowners insurance, you want to make sure you have the best rates possible, okay? And also when you're getting a loan, personal loan, a student loan, if it's a private loan, or you're getting even a loan on a boat, motorcycle, things like that, mortgage, the lower your credit score, the more money you're paying, the higher the interest. So, that's pretty much all it is, guys. That's why it's the most important thing. It's going to save you money. So why not invest in your credit? Why not invest in your credit score? Because really all you're doing is you're saving money. I mean, I never understood how people, you'll pay, $500, and I've done it, you know what I mean? But I always made sure my credit was good when I did do it, okay? It's a difference. Yeah, I haven't been out in the club in a long time. It's because my mindset right now has changed, and I'm on a different path, different trajectory as to where I'm going to be heading. And I'm going to be sharing that with you guys as well on my YouTube channel, and pretty much diving deep on what has happened to me even the last 12 to 24 months that has changed my perspective on money and also credit, okay? But before you drop money at the club, on sneakers, on things like that, guys, make sure that you pay down that credit card first. Don't use it. Make sure you're investing on even credit repair. Like I said, here at gotcredit.com, will help you with navigating those waters when it comes to fixing your credit, helping you build business credit. So $100 a month, guys, that you're investing is going to help you unlock doors down the road that's going to save you hundreds of thousands of dollars. I mean, you get right now a mortgage that's, I think right now the rate is like 5-6%. With bad credit, you're looking at like 8-9%. Guys, that's a difference of like $200,000-$500,000 for the same house. But you could get a better credit score, okay, and pay less, and then take that money that you're throwing away on interest, okay, and invest it somewhere else. Start a business, open up a new business, buy a gas station, things like that, guys. It's crazy, man. There's so many opportunities out there for you guys, okay? So remember, having a good credit score, okay, is important not only for when you apply for credit, but also when you apply for things like apartments and employers. Now, here's the thing, guys. An employer does not have a right to access your credit score. They'll be able to see your credit report, but they're not able to know what your credit score is, okay? So they won't know that you have a 590 or a 700. They're just gonna look at the data that's on your credit report. When I used to work for the VA and the government, okay, they knew my credit report, but they didn't know my credit score. And this was, honestly, I think it was around the same time I started Got Credit or Clean Slate. You know what I mean? I was applying for the VA and my credit was dinged up, and I still got the job because I was able to explain every single thing. I had proof of letters of me disputing stuff, and that was just when I started getting into the credit game. All right, or as far as a business wise. All right, so make sure, guys. Once again, just make sure you guys maintain a good credit score overall. It's very, very important. And make sure, guys, payment history, 35% or 192.5 points. Credit utilization is 30% or 165 points. Time in file or credit history is 15%. Sorry, brain fart. Okay, it happens. It's 15% or 82.5 points. Time in credit mix is 55 points or 10% of your score. And then also inquiries or new credit is also 10% of your score and 55 points. Okay, guys, that makes up 555 points. And just to make sure you guys are aware of that, because setting your accounts up on auto pay, paying your payments on time, paying your credit card balances down, applying only when you need to, checking your credit regularly, guys, you're on your way to an 800 plus credit score. It's not gonna happen overnight. Okay, but imagine if I told you right now, hey man, do this right here, and in 2 years you will have an 800 credit score. Will you do it? Will you stop going to the club? Will you stop buying bottles? Will you stop all the expensive clothes? Will you stop, all the things buying, even on Temu and buying all this stuff on Instagram, which we're all guilty of? Save that money, build a reserve, get your credit score up, have money in the bank, so that way when something presents itself and you're able to make money, not only do you have good credit, but you got about 30, 40, imagine if you had $30,000, $40,000 in the bank. How do you think you would feel that now when you have $30,000, $40,000, $50,000 in the bank and somebody says, yo, let's go to the club? You're like, nah, man, it's taking away from my money. I don't got time for that. I'm on a mission. I want to build generational credit. I want to be able to buy and buy this pizzeria, this laundromat, this gas station. I want to leave this for my kids. I want to buy this property, this 4 or 5 unit. I want to leave this for my kids. That's where you're at, guys. That's where you're at. That's where your mindset should be at. And that's ultimately where you need to be focused on, okay? So guys, just to wrap it up, your credit score is a 3-digit number that can affect you for the rest of your life. And if you don't implement the tools and the things you need right now, it's only gonna be handed down to your kids, okay? If you have bad credit, technically your kids might have bad credit, their kids, but if you have and you practice the things that you need to right now to build good credit, to be able to put a better mindset on how to save and spend money, you'll be good to go. I promise you guys, it's important. It's very, very, very important, guys, and it matters because if I didn't have good credit, okay, the last 12 months would have took me out. Okay, luckily, even though which like I said, I'm going to explain on other videos, and we'll be able to break that down. I might do like a live video when I share my stories. Okay, is that as long as you have good credit, it's also a cushion for when something happens. You'll be able to have that credit as a backup plan in order to continue making life go on. All right, guys. So I hope that you learned something today. Please comment below whatever questions you guys have. I will reply to you guys. I will, if you have a question, reply. I would love to, see what questions you guys have on today's topic. And remember, guys, that credit scores do matter, not only for just applying for credit, but just everyday life. I mean, think about it. If you have a 720 credit score, you ain't gonna be like this. You'll be like, yo, I got a 7. You're gonna be pumped up. You know what I mean? It changes this. But if you have a 580 credit score, it's impossible to be like, yo, what's up, guy? It's impossible, okay? Trust me, I've been there. I know. Having a low credit score affects this a lot, okay? It puts you in a bad mood. I mean, when you have a low credit score, you're like, man, get out of my face, man. Man, look at him. He got the cars. He got this. She got those. I'm telling you, we all have the tools, the knowledge, and the capability, guys, of having 700 plus, 750 plus, and even 800 credit scores. It's just up to us to make the right decisions to be able to put ourselves in, better opportunities. Because, guys, listen, honestly, there's going to be some doors that are going to get open for you. I know it. If you're watching this video, it's not by accident. It's on purpose. There will be doors that get opened for you. At the end of, we have only a few months left in 2024. But mark my words, if it doesn't happen now, it's going to happen in 2025 or 2026. Are you going to be ready for when that opportunity comes knocking? And if you have bad credit, is it going to make you not be able to take advantage of that opportunity? So do everything you can to get your credit right, so that way when opportunity knocks at your door, you're good to go. All right, guys, thank you so much for watching. Make sure you subscribe and make sure you hit that notification bell so when I drop new videos, you guys will have access to them. If you're not following me on Instagram, make sure you do @thecreditdude. By the way, guys, I do not have TikTok. I do not have Snapchat. And I forgot what the other one is, or Twitter. I only have Instagram and YouTube. And if you guys want to follow me on Facebook as well, I have my personal Facebook below. Listen, guys, I just want to help you understand credit. I want to help you understand business credit. So what you can expect from me moving forward every week, there's going to be one video on personal credit, and there's going to be one video on business credit, okay? So one video on personal credit, one video on business credit here on YouTube. And I want to share with you my stories. I'm going to share with you my experiences. So on top of those 2 videos a week, I will be dropping videos about my life. You know what I mean? I'm a very transparent guy. I'm a U.S. Marine. I served from 2001 to 2007. So shout out to all those veterans and people still serving right now, no matter what branch you are. You are my brothers and sisters, okay? And that's about it, guys. And to all the clients out there at God Credit, we truly appreciate you guys. You know, we have the God Credit Academy. It's $100 a month. We help you with your personal credit, your business credit. We do all of the disputing for you. So if you're looking to get started with someone that will take your credit to the next level, we do all of the disputing for you. Like I said, guys, there's going to be the description box below, or just go to godcredit.com. You'll be able to fill out the information on there, get started with us. It's only $100 a month. We do everything for you guys. We have God Credit EDU online, where it gives you access to all of our content, all of our previous webinars, monthly workshops, things like that. You get a credit coach. Guys, what we do in the credit space for you, personal credit, we do all the disputes for you. I'm not gonna have somebody come on my platform and teach you how to do it yourself. Which, listen, that might be something you want to do, but we're gonna do it for you guys. Listen, you might be busy, so we're gonna take off the headache and we're gonna do everything for you guys. I want to teach you about business credit. Business credit right now, guys, it's always been hot. It's always been a topic. We've been doing business credit since 2013. We're not new at it. We've been doing it for a very, very long time. We'll teach you about the American Express, how to get multiple American Express cards, how to refinance your auto loan from your personal credit to your business credit, how to establish business credit, the importance of business credit, how to run your business. There's so many things that we do, guys, for you. We have a private Facebook group, and more importantly, you're gonna have a dedicated credit coach that's here in the US to help you with navigating those waters of credit, guys, okay? So not only are we gonna help you fix your credit, business credit, but you're gonna have a credit coach that's gonna be able to help guide you. You have a question, email, we'll be there with you every single step of the way. Other programs, I don't really care what they do, because I know that they don't do what we do. Okay, guys? I mean, when I was a Marine recruiter, we never bashed the Navy, the Army, or the Air Force, because they're still doing what they got to do. So I'm never going to bash another company, because I don't need to. You know what I mean? So if you are a business owner, never bash your competition. Never say what your competition isn't doing. Just focus on what you're doing. And at God Credit, all that we're worried about is how you're doing, how your credit is doing, and what we could do to better serve you. So if you like this video, please share it with somebody. And if there's something that you want me to break down specifically, comment below. But also, if you have a question, comment below too, guys, and I will answer it right away. Other than that, peace out, salute, and I'll see you guys in the next video.